What's going on, everybody? Charles Moon here with Prosper Trading Academy, and today I'm here to bring you my best trade and worst trade. Now, once I've developed this trader mindset and skill set, in all honesty, the best trades don't really stand out too much. I've had plenty of them. And again, once you develop the skill set, you should. But I guess what allows me or helps me stay humble and remain humble is the worst trade that I've ever taken in my life. Now, I was fairly new to the game. I just started with my trading firm. I was having a decent quarter. It was my first quarter. I wasn't up, a crazy amount, but I certainly wasn't losing, and I was doing well, very confident, very happy. And then Apple earnings came in. Usually with my old firm, we're flat by the end of the day, and that was it. But this is the first time our floor manager came out. I'm not gonna say his name, but it starts with a D. And he was out here saying to all our traders, and the firm at the time had about 120 traders on the floor, saying, look, guys, Apple earnings. I want you to trade Apple earnings. This is going to be a good one. Apple earnings. I never traded earnings before. I never traded after hours before. I had high expectations because at that time, Apple was a big mover. It's not so much now because it's obviously split, but this is pre-split. This was back in 2007. And as a trader, we didn't get paid on a daily basis. We didn't get a salary. We basically got our commission check at each individual quarter. It was a 1099. And so I was in this position where I was ready to get my first commission check, and then Apple earnings came up, and of course, you know what happened? Apple dumped. And I didn't know, I didn't realize it. And again, the internet was a lot slower. Executions were a lot slower. This was back in 2007. And I just couldn't get out of Apple. It was horrible. I mean, I was getting filled 5 shares at a time, and I was panicking trying to get out. And I ended up trying to reverse my position on accident because I was trying to flatten out. I ended up short, and then of course the stock ended up bouncing. So I took a loss on both sides, and it ended up wiping out my whole quarter's commission check and then some. It was the worst experience. There's nothing more devastating. You work for months and it was gone in minutes. And again, I didn't realize it because I didn't know. I was told by my uppers to trade this. They told me to trade it a certain way, and I got absolutely pummeled. So this is why it's always on the trader. It's always on the individual to make these choices. You are the controller of your account, right? Nobody trades your account for you unless you gave your money to a financial advisor or an investment advisor. But if you are trading actively, you are the one in control. You are the one that decides to enter and exit. Now, for those that didn't know, Apple would swing anywhere from 80 to 100 points at that time. So imagine being on the wrong side with a few hundred shares, how devastating that could be. You're thinking you're getting out at $5, $10 loss, and next thing you know, you're getting filled $40, $50, $60 out of the money. This was the most devastating loss. It also really built a foundation for me understanding that I am the controller and that I am never touching earnings again. With underlying trading options, that's not a problem, right? The most you could do is lose a premium on your puts, on your calls. If you're taking a spread play, perfect. But with the underlying, obviously you're exposed to those swings, and the higher volatility, the bigger reward, the bigger risk as well. And again, I just didn't realize that. I've never seen Apple move like that during the day. Certainly Apple would have some major swings here and there, but that was way beyond my realm, my control, my understanding. There was no liquidity. And again, it was devastating. Now, as far as some of the best trades I've ever had, they actually came both on the penny and the large cap side. It's funny, but like a name like IGC, we caught a huge runner before. I was talking about my clients who were getting in around that 70, 80 cent level. This was before they actually were tied to the cannabis sector and everything else that they've been involved in. They're a notorious pumper, and I thought they were great value. I'm like, this is a cannabis company, it's cheap, cannabis is hot. And sure enough, clients got in. We caught a huge ripper into the double digits. Some got out at 8, some got out at 10. I believe it got up to like $12, $13, and then it started crashing down. And that was one of the best trades that I took because it only had to happen in a short period of time. It happened in 2-3 days. So imagine that kind of return happening in just a short period of time. It was just a great, great runner. GNUS is another one as well. GNUS in pre-market action was at 30, 40 cents, and this thing started trading over $10 in less than a week. So these are these names that stand out the most, not because of my own personal benefits, but because of how the clients benefited. And in fact, GNUS was a jump starter for one of my clients who ended up basically going on this run. He had just started with me, starting with around $33,000 and ending up with over $800,000 by the end of the year. I mean, that was a huge, huge building block for that gentleman. And still to this day, he is, you know what, kicking some tail. And because of that, you just never know where your jump starter is. And that's why it stands out to me. Not because of what it done for me, but what it did for my clients. So there's always obviously pluses and minuses, right, in the markets. When we take on risk and we don't manage through that risk, or we get into a position where maybe something external happens, obviously that's the stock market, it sucks. We certainly never want to be caught up in it, but it's something that could possibly happen if we trade without proper management or we're not paying attention. Now, it's the flip side as well. As a trader, you'll also recognize these opportunities. You'll be in earlier as opposed to the rest of the crowd who's chasing it after 1,000% move or a 500% move, and you're already long and you're starting to cash when they're trying to get in. That's always the downfall for new traders. People that are chasing after the pot of gold when the pot of gold has already risen and people are already cashing out on that gold. That's the most important aspect, folks. Your best trades will be the ones that you're early on, because as a trader, you recognize that opportunity, not the ones that you chase after. Your biggest losses are generally going to be a mistiming of entries, or a position where you didn't manage through, or even worse, you were going to exit and you talked yourself out of exiting and you're paying the price. So something I always tell my clients, let's be realistic about things. If a stock has moved this amount, a tremendous amount in just a short period of time, how much more upside is actually left? Yeah, we thought it may slow down at $5 and now it's at $9. Now what? Are we going to continue to chase after the dream here? How much more upside is there going to be? And then in that same respect, what's the likelihood of a pullback and how steep of a pullback it could get to? You know, there's a derogatory term out in the marketplace, especially with penny stock traders, called bag holding. Well, what ends up happening in these situations is that people chase after the dream, buy in at peak, and they're stuck as it retraces back to where the stock came from. They're holding the bag. Now they're praying that it recovers. It needs to make another 500% jump over the next few days or whatever time it is just for them to be break even. The theory of buying the dips is super important, but so is risk management and stop loss management. Without these aspects, guys, we're trading blind. We're hoping and praying. And hoping and praying doesn't work in the stock markets, because the stock market doesn't care if you're losing, because there's someone on the other side of that coin that is winning. It's a, dog-eat-dog world, basically, right? Laws of the jungle. Only the strongest survive. So keep that in mind. Your best trades will always be on those opportunities that you saw ahead of the market, and your worst trades are the ones that you mismanaged, chased after the dream, and basically bought the peak, and now you're stuck. Don't be that person. Be patient and be disciplined. You hear this all the time, not just from myself, but from everybody in the industry. There's nothing wrong with being aggressive, but make sure you are properly timing your entries into the market based on the situation. And then you'll prevent that worst trade of your life and focus more on the best trade of your life. All right, guys, so if you happen to, like what you heard today, do me a favor, like, comment, and subscribe. Click on that notification bell. Do me a favor, guys and gals, in the comments below, let me know what else you want to talk about, what you liked about this video. If there's follow-up questions, we'll get back at you. Peace and love, everybody.